Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Thursday, February 14th, 2008. Well, we sure did see that pullback today after a rally over the last 3 to 4 days, and it was a pretty tremendous pullback, to be honest. We saw some definite losses all across the board on all indexes, as we saw the Dow losing 175, the Nasdaq losing 41, and the S&P 500 losing about 18. All across the board, that was around 1.5% drop. Now, we all know we've had a rally, and yesterday we had talked about the possibility of seeing a consolidation or small pullback. This was slightly larger than what I had in mind, I'll be honest here, and it's not necessarily a good thing, but it's very bear market characteristic. Alright? Characteristically, this is normal for a bear market. If you have a couple-day rally, you have to expect a sizable pullback, even if you do have your sights set on another move up. So we are going to look at the charts here, and we'll get into all this nonsense going into the next few days about what we see happening and so forth. But let's take a little look at today on the intraday chart. We saw today basically trending to the sideways pattern, so a slight bit, up, give or take. And ultimately what we saw today was once Bernanke got on TV, and again, there were a couple things going on. We had a little pre-market news, nothing major whatsoever, but really once Bernanke started testifying around 10 o'clock, and it's almost funny to look here, you can see the topping tail right here when he started. And this is virtually, he started at 10 o'clock, a little after 10, right around here. We got an initial push up once we got his comments. And again, we were selling off into his speech here. Then always the media gets the comments beforehand, what he's going to generally discuss, and that's what we got, this initial push up. And look where it coincided, right here. Alright, the low coincided with a touch of the 200 moving average on the intraday, and let's take that line away. You got a push up right through that 250 moving average, and look at that, a pierce of the 50 with a tail, a topping tail, a close right below the 50 on the 20, and then from there, that was the signal to go short as we topped out and could not get above that 50, and the selling just ensued. You had a basic 3-bar surge here. You have 1, 2, 3 to the downside. You had a sideways trend to up, which is a bearish pattern, right up to that 20 moving average here. Another push down, sideways again, right up to that 20. Again, a push down. And then you had a little bit of a tail formation there. Nothing major. Push up, getting us back above that 20, only to sell us into the close. Alright, now the one thing we should point out here is that again we see a general trend developing on the downside, and you can see the basic here on the trend is just drawn in quickly, and you can see there. And again, this trend line should actually be out a little, so it's touching the bottoms there, but you get the general gist here. You can see the parallel lines and the market just staying relatively in between those on the weaker side. And the way to tell which is the weaker trend, or which way the market is trending, obviously, is how many times it touches the bottom end of that trend. Alright, notice how we started up here on the top, we hit it on the bottom, bounced, but we never got to the top of that trend, hit the bottom again, never got up to the top of that trend line here again, and fell off again. That's telling you that the market's very weak. Once you start hitting the upper side of the trend line, if you were to hit this point here, this point here, this point here, you start looking for a break up. Alright, it just works like a door. You run into a door enough times, and here's the door. I'm running into it, bounce off. I hurt myself a little bit, run into it again, bounce off, hurt myself again. Eventually, you run into that door enough times, you're going to bust through, and it's going to just break down. You're going to go through flying to the other side, ultimately giving you a rally to the upside. We saw that to the downside more so that gave us a definite downside trend in the markets, as we obviously knew what we were having. Alright, so that's just a little info for all you guys that like chartists and technical side of things and understanding that side of the markets. Now, again, we mentioned Bernanke spoke before Congress today, as did Paulson, and they really had nothing new to say. For the first time, I guess you could say that Bernanke downgraded the economy in many senses. He never went as far as saying it looks like we're entering a recession, but he basically went as far as he could do without saying it. Now, he's smart enough to know that if he uses that R word, the infamous R word, the markets could really tumble, so he's obviously saying it and trying to prepare the markets for it without actually saying it. So in any case, that's where we stand right now. Let's take a look at the daily charts, because this is where we're going to be able to chart out where we're going to go. And I want to start, here's the Nasdaq, but let's start with the SPY. Alright, you can see the SPY fell down during the day, and 2 times it bounced off the 200 moving average, so it did hold that intraday support. But now let's look at the daily, and here's the daily. Now, we had the nice rally, and obviously we knew we were going to get that rally as we had called it in previous videos. The pullback today on this SPY was not that dramatic. So the SPY and the futures gave us the pullback we expected. The Nasdaq is the weaker index lately, even though it had a tremendous gain yesterday. I'll show you that chart and show why it's the weaker index. Now, we knew we were going to have a consolidation move here, folks, on the SPY, and this is what we talked about. We've called almost every major move here in the market since going back to February of last year, or whether it's the big drops or what's been coming. Ultimately, this is a smaller nonsense move, but whenever you have a power move over the moving average, I always look, and we always look for a consolidation move, which is a sideways to downward move. And the important thing is you maintain above that moving average. So right here, you guys see, we did come down, we did touch the 20 moving average, but we did not close below. So in a technical sense, you can look at this as the consolidation move, and should we break below this, and again, at this point, it's up in the air, but you have to give the upside a little bit of bias here because we stayed above that 20. Should we break in this area below, well, then you start looking for support right here on the SPY, and then after that, if that breaks, well, guess what? You're heading probably down in this general range. So keep that in mind, folks. We got to give the market the benefit of the doubt on the SPY here because we stayed above the 20, still looking to consolidate to the sideways move here, and we will continue to watch this. Now on the ES futures, it looks the same. However, on the Nasdaq, let's take a look at the Nasdaq daily here. All right, a little bit different. All right, and you guys can see the mega move here we had talked about in previous videos going back to last Thursday, a full week ago now, coming into the markets, hitting it right there for that move. We had that pullback, and we basically closed right on that 20, but slightly lower. So again, it gives a little murkier sense for the Nasdaq here. I still would like to give the market the benefit of the doubt here on the Nasdaq, saying that we closed close enough to that 20 moving average that we'd have to confirm tomorrow to signal to me that we're heading lower. So I'm going to give the market the benefit of the doubt here and say that we could end up moving sideways here for the next few days to the positive, or to the, just basically trending right along this 20 moving average, which will continue down, by the way. The 20 moving average, most of the days here are below, so that moving average will continue down here. So as long as we stay on or around that moving average and we don't break successfully below and confirm the move, I'm going to give the market, even on the Nasdaq, bias to the upside, just a slight bit now. Not much, just a tiny bit. We were on a much higher bias over here, obviously. We got that move. Now you can expect, especially in a bear market, to see some of those profits taken off the table. We are going into a long weekend, and we are going into Friday tomorrow, so it'll be interesting to see what happens in that sense. All right? So again, look for that. Should we break below that 20, well, then all of a sudden the downside area comes in play. That, and then after that, this point. All right? Drawing that. Let me take away that line so we can see that a little clearer. So we'll give it the benefit of the doubt here for a consolidation move. Should we break below tomorrow and confirm the move down, well, then we're looking for the downside for this line to be tested, and then after that, this line. As long as we stay in that consolidation, then you can possibly look for one more move to the upside. Resistance on the upper trend will be there, and then around here. All right, folks? Now let's look at the QQQ, because the QQQ should mirror that, and you can see the QQQ was even weaker today, and it did close well below that 20 moving average. We're going to watch for confirmation. So we see a little bit of divergence here, folks. We see the S&P, the Dow, having more strength out there. They're closing above their 20 moving averages. On the other side, the Nasdaq closed on or below the 20 moving average today. So we're going to have to continue to follow this market over the coming days. Now, after hours, we had a couple earnings. We had Priceline coming out with earnings. They're trading up about $8 from the close, and I'll show you that level 2 just to give you a sense here. Let's check that out. All right, here we go. Here's the level 2. And you can see trading at 111. The last print was at 111. The close was at 102.23, down a couple bucks. So right now, Priceline doing all right on the earnings. Okay, let's take that away. Other than that, we also had DRYS, but no major movement in that stock. Not worth showing. It's pretty much trading to the sideways here. Maybe we'll get some movement a little later on earnings. All right, right now the future's just trading after hours, down about a point. But overall, we're coming into Friday here after a nice little push up, and it's key that we hold these support lines. And again, just to go back to the SPY, you can see here how important it is that we hold above this 20 moving average if we're going to see more upside. So it's all about just watching the charts, and again, we're on a near-term pivot point here. Should we move below, then all of a sudden the downside becomes in play. As long as we stay above, you give the benefit of the doubt to the upside. All right? Have a wonderful day, folks. Come join us in the Intra Day Stock Chat. It's so fun talking with everyone. Everyone's a great, everyone has their little facet they add to the chat. It's just a big group of individuals who love the markets and come to trade together. That's what it's all about. That's what it will continue to grow as, and we'll continue to promote it as. Have a wonderful evening, folks. Enjoy the swing trade alerts. We been holding steady on those especially for this market. We've been doing well. Come join those as well. You can look at that on inthemoneystocks.com and check out the track record as well. Have a wonderful day, guys. We'll talk to you tomorrow. Take care.